Good evening, everyone. Welcome to Banao Bharat's Trading for Living Monday live session, 9th of October. And we know what happened over the weekend, a surprise attack by a terrorist organization on Israel, very brutal attack. And on anticipated lines, our markets, or at least not just our markets, the global markets have reacted on the downside. Whenever uncertainty develops, the movement is never on the upside, it is always on the downside. Whenever there is a surprise, usually the movement is on the downside, and very few positive surprises will really cheer the market onto the upside. So it's general market behavior to react faster to the down moves or on the downside for all the negative events, and react slightly positively for all the good news. So this is what October looks like as of now. Opens at around 19,638 levels on 1st of October. I think it was 3rd of October. Yeah, first was Sunday and 2nd of October was Monday. From 19,638 it opens, goes down little bit, and from there on does some decent pullback. Again, once again, the negative news ruptures the up move, and once again markets are struggling. From a trader's perspective, it doesn't really matter whether market goes up or down, as long as the trader is able to catch the trend on the right side. What bothers a trader is uncertain price action, where he cannot decipher a clear-cut action developing based on the price movement. So that is what will bother the trader more. What kind of position shall I take, whether on the long side or on the short side? 3rd of October, flat movement. 4th comes down. 5th tries a pullback with gap up. 6th, once again there is gap up and moves with small movements. And today, Monday, it opens lower, does 2 candles of pullback in the morning itself. After that it is one-sided on the downside. 19,505 days low, and closes near to the days low at around 19,522. Before we go into what next, we will also see into the Bank Nifty. Bank Nifty October season starts off around 44,600, and today we are trading at around 44,000, which means it has cut October 4th low of 44,050 and has closed below that by making a new low at 43,935. There was one pullback or contract trade on the long side if Bank Nifty had cut 43,935, but Bank Nifty did not come to 43,935 once again, but towards the end it closed at 43,972. Will that level of 43,935 hold good for one more day of contra long? That needs to be waited and watched, because it all depends on tomorrow morning's opening and opening movement. So the first 15 minutes is very crucial. If it opens below 43,935 for whatever reason, then I can say the buy call or the contra long what we had thought of at 43,935 will get negated because the opening itself is below that level. Supposing market does not gap down, it opens within the range, it opens slightly positively, then after having opened positively, if it starts coming down, will it hold good or not depends on tomorrow morning's price action, and only then we can decipher and say if one more long trade will be available for us tomorrow or not, and whether the pullback will happen or not. Tomorrow anything can happen, it can either gap down, one more gap down, then this level will automatically get negated. The second scenario is it opens within the range and starts coming down. While coming down, depending on how many candles have passed, depending on what kind of new candle formation happens in the opening, that will decide whether the today's low will hold or not. The third scenario will be opens within the range and starts going up, crosses 44,287 and starts making new highs. Then what will happen? So these scenarios we will know only tomorrow morning. Based on that, we need to take a revised view and trade accordingly. So what is the possibility of a normal open or a gap down open? In my view, I think the top is already made for the calendar year, and October we have started off on a slightly volatile grounds. The pullback was very questionable for 2 days. Thursday being an expiry day, the pullback was extremely questionable. Friday, in spite of RBI meeting, the price action was like very different. Actually, Thursday and Friday's price action itself suggested markets may not go any further up and it might start going down slowly, but the weekend news actually accelerated the down move, and in the opening itself we got a gap down. And structurally, I would say for October we have a changed data structure, which means there is possibility of markets going further down. Until where we need to wait and watch, we don't know. But the way the October's price action has formed, I would like to believe that the price action moving forward in the coming days for this month will be more on the downside and less on the upside. Definitely there will be higher resistance beyond 19,700, but very unlikely, at least as of now, it is unlikely that market may even go that far. The question of all-time high is almost ruled out, at least for this month, and maybe we are headed towards once again witnessing August lows, which means August low, if you remember, it was a lower low compared to July. That is a significant. There was one pullback from there on, and good movement happened in the month of September, but October has started off on a dicey note, and already we are witnessing some strenuous global events developing, which might accelerate the downward movement, and we might go below August lows. At least the current price action is, that is what it is suggesting. It might change by a couple of days, holding slightly higher by giving some good up move days, then probably the structure might start changing on the intraday time frame. But as of now, if you see on all time frames, I repeat, on all time frames, we are on the downward movement. Whatever little bit of pullback we saw on intraday charts for 2 days, that also has got negated today, and there is no more reason to believe markets will start going higher from here on. So just strategize yourself accordingly and have a proper entry and exit mechanisms so that you will not get caught unaware of. So at the end of the day, if you have a proper stop loss, then I have told this before also, if you have a proper stop loss, then your entry either on the long side or on the short side doesn't really matter. You straight away start off with 50% probability of winning. After you enter into the position, what will the market do? Market will either go up or go down. So if it goes up, then your trend or your analysis is right, you will end up positively. If it goes down, then just handle with the stop loss. Keep your trading activities simple. Do not complicate with too many parameters, and especially during the market hours, just ensure you don't fall prey for the news. Have price action as your base. Even if you interpret the price action wrongly, it is still better than trying to interpret the news and then trying to take a position here in the market. So just keep these things in mind. Let us see how tomorrow opens up. We are heading into a second Fin Nifty expiry, I guess. This is second week of current month. So there will be some action in Fin Nifty. Global markets haven't reacted very wildly on the downside. What I saw last, Dow Jones was initially trading just about 100 points lower, but it made little bit of recovery also. But by the end of the day, Dow Jones might give up the recovery and it might still close in the negative. Coming to what's happening in the Middle East, whenever Middle East is involved, or whenever Iran, Iraq or Palestinian and Israeli nexus is involved, the battle is little long drawn process. It won't happen or it won't conclude very quickly. So going by the past, there is no reason to believe that there will be some resolution immediately. No matter what reason you have, war is a painful affair for both the countries. For all the participants involved, it is going to be a drain on resources, and it won't be a peaceful environment for people to do their normal day-to-day work. Whichever way you see, war is not a good sign. Last year, markets have witnessed Russia and Ukraine's war. This year, global events were more into inflation, more into dollar index, more into US yield curves and other things. But unfortunately, once again, we as market participants have to deal with some more time of war related environment, which only means unusual price actions, unusual volatility, traders and investors both kind of shooting in the dark, not knowing exactly how to go about. So lot of to and fro, lot of ups and downs might continue in the coming days. Just whenever you are not sure of how to go about, the first rule will be reduce your position size. It's okay to be in cash if you are an investor. It's okay to be in fixed return instruments, and it's okay to be a trader in these kind of environments. You don't have to be an investor. Shift yourself or change your hat from being an investor to a trader, but ensure, like, you learn the mechanics of the trading well and start off small. Or if you are already having a trading portfolio, then have reduced exposure towards day to day market activities. That way you save yourself for tomorrow. If you are there tomorrow, then most of the time people, we don't have to do anything, they themselves axe their hands and legs. So like in war, trading also is to a large extent all about surviving in the game and being present once again for tomorrow's price action. If you survive yourself today with small loss or break even or small profit or large profit, then tomorrow morning you are once again there in the game and you will be facing one less opponent, because one opponent would have, like, gone wrong in a big way. Each day there are so many new market participants entering. Each day people come with some kind of a hope, some kind of dream, some kind of preparations, but who will ultimately win is the one who is in the game every day, the one who is there constantly under all circumstances will eventually take large part of the wealth from the markets. So if you know these basic things, definitely you can do well in the markets. Let us see how tomorrow pans out. It's quite late now. Let us wind up today's session and meet once again tomorrow. Until then, Om Swasti.